Hello friends, I am again with you today from Dealing Assistant mobile application. It has been quite some time and hope you are all doing very well. Today I am going to walk you through some of the important changes as well as new features incorporated in this application. First and foremost, let me demonstrate you the new date selector put in place throughout the app. Since most of the users of this app found the old date selector confusing and hard to operate in terms of finding a previous date and all. So to address the issue, it was necessary to come up with a viable alternative. Now the date selection throughout the app is pretty easy and understandable with this new date selector. After selecting the relevant day, month and year, tap on the Enter to select the date. Sometimes you may need to clear the already selected date, for that there is a clear option provided in the same date selector itself. Having that problem of date selection solved, let us move forward into exploring the major update into this app. You got it right, it's the much needed and asked for income tax calculations. To access it, simply tap on the income tax icon in the bottom left corner of the app. There you go, this is the main interface for income tax calculation, which is pretty much self-explanatory. This whole interface for income tax is divided into 4 pages. Income, deductions, more deductions, and lastly the much needed taxables. Before we dive further on how to use this app, let me make it clear that the income tax can be calculated using 2 methods from year 2020. Old method, new method precisely. Basically, these methods differentiate from one another based on the percentages of tax applied at various slabs of the taxable income. Besides, in new method the taxpayer has to forego almost all the deductions enjoyed by him earlier using the old method. Fortunately, this app can calculate tax using both these methods, so that a user can choose between the two, which is most beneficial to him. Coming back to our topic, we were talking about income interface. The interface is mainly concerned with the personal information in its upper part. Salary and other income in the lower part. Here some of the fields such as salary, other income, PRAN in the deductions interface are marked in maroon color, because they are the only necessary fields to calculate tax using the new method. Rest of the deductions will not be taken into consideration. To make it understandable, we should take an example to illustrate how calculation using old and new methods affect the tax liability. For making the example precise, we have already filled the values of fields. Enter the name of your department. Enter the tax collection account number. Enter the 2 dates for which tax is under calculation. Then the name of the employee. Code number. Designation. Select the class of the post the particular employee is holding. Enter the PAN number. Enter the PRAN number if the employee is under new pension scheme. Now this is important, select the age group carefully in which the employee falls in. It will differentiate the taxpayers in 3 categories, that is, regular employees, senior citizens, super senior citizens. This option is necessary for calculations using old method. However, for new method this field is irrelevant as the percentages of tax are kept uniform throughout all ages. Enter the aggregate annual salary. Then there are exemptions under Section 10, such as HRA, leave travel allowance, agriculture income, life insurance, gratuity, leave encashment, transport allowance, etc. You can claim exemption on your HRA. Under the Income Tax Act, if you stay in a rented house and get HRA from your employer. Enter the PAN number of your landlord in case you have any HRA exemption under Section 10 above. Enter the annual clinical research allowance if you are receiving it with your salary. It is preferably for medical practitioners. Lastly, enter the aggregate amount of income from other sources. Now switch to the first deductions interface. Simply enter the amount in the relevant field wherever it is applicable to you and leave the rest of the fields as they are. While entering the amount regarding your PRAN contribution, make sure you only enter the annual employer's share. If calculating tax using new method WILAs, enter the full annual contribution in case you are calculating using old method. Employer's share is the only deduction applicable in the calculation of income tax by new method. Here at the bottom you will again see a green area which shows the sum total of the above deductions you just entered under a single banner of total deductions under Section 80C. Now switch to the second deductions interface. Here in this interface enter the relevant deductions applicable to you, and there is again a green area at the bottom to show the aggregate of above deductions. Finally switch over to the final interface, which is the taxables. Tap on the old method if you want to calculate the income tax by old method. Otherwise, tap on the new method to get the income tax calculated by new method. This will show the output below, which I am going to briefly explain to you. The total taxable income shows the portion of the aggregate income which is considered for calculating the income tax. The total calculated tax is the outcome of the tax calculated on the above total taxable income. If your taxable income is less than 5 lakh, the total calculated tax is deducted by rupees 12,500 under Section 87A, which means there is no tax on income of rupees 5 lakh or below. The surcharge and marginal relief are applicable under certain conditions to those whose taxable income is beyond 50 lakh. As you already know, health and education cess of 4% is applicable on top of the total tax calculated. Finally, the total tax payable shows the tax to be paid by the taxpayer. Sometimes it may be the case that the employee's salary is deducted with some amount towards tax on monthly basis. Put it in the advance tax field. Sometimes some arrears are deducted with tax deduction at source. Put it in the TDS field. And if the employee had been transferred and some amount in previous department has been deducted on account of tax, put it in the tax deducted field. These amount of advance tax, TDS, and tax deducted in other department are shown in aggregate by the total less. These are to be deducted from the net tax payable, as these portions of the tax have already been paid by the taxpayer. Then you will have the tax payable liability of tax refundable. If the net tax payable is more than the tax already paid, shown by the total less, you will obviously then have a tax liability. Otherwise, you may be eligible for tax refundable and have to file for an income tax return using Form 16. If there is any liability, divide the amount as per your convenience into 2 installments during the month of January and February. Finally, hit the PDF button to generate the income tax calculation sheet. You may have to wait for some time to let the PDF generate successfully. This sheet will show all the information regarding your income tax that you may use as per its purpose serves. This PDF sheet will be saved in the folder by the name of Dealing Assistant. Here you can see it is being saved. That is all for the session. Take care.